Welcome, everyone, to another deep dive. Today, we're really getting into something crucial for global business. We're talking about the corporate banking platform market.
Right, the digital backbone, really.
Exactly. Forget the dry reports for a minute. Think about the systems banks use for their biggest clients, managing cash, complex deals, everything.
Mm,
And we've got some fresh analysis here from Cognitive Market Research, looking right out to 2033.
good stuff.
Our goal, as always, is to pull out the key insights, maybe some surprising facts, and just give you a shortcut to understanding this really fast-moving sector. Okay, so to really get a handle on this, let's talk numbers first. Because the scale here is it's pretty significant.
It really, yeah.
The global market was already over, $8.2 billion back in 2021.
That's right, 8,230.86 million, to be exact.
And it's projected to hit 10,434.5 million by 2025.
Yeah, steady climb.
But then looking out to 2033, we're talking 16,769.5 million, nearly double the 2021 figure.
It's impressive growth. And that compound annual growth rate, the CAGR, it's holding steady at 6.11%.
Right, 6.11%. So this isn't just some, flash in the pan tech trend. It feels more fundamental.
Oh, absolutely.
What do you think are the main things keeping that growth so consistent? What's really driving it?
Well, there are a few big forces at play here. I mean, first, there's just this massive push for digitization everywhere, right?
Yeah.
Corporations now expect banking to be seamless, real-time.
Not just basic online access anymore.
Exactly. Then you've got the rise of fintech. These tech companies are genuinely challenging the old ways, forcing banks to innovate fast, adopt these kinds of platforms just to compete.
Okay.
And finally, it's simply demand. Businesses, big and small, they need more streamlined, integrated banking. The old ways, siloed systems, manual stuff, that's just not cutting it.
So these platforms, they're moving from nice to have to essential.
Totally essential. Foundational infrastructure, you could say.
Okay, so that's the global view. Now let's kind of zoom in a bit. How are these trends playing out regionally? What if we start with, say, North America?
North America is definitely a huge piece of the puzzle. The projections show its market basically doubling. It was around $2.7 billion in 2021.
2,716.13 million.
Right. And it's forecast to reach over $5.2 billion by 2033. It's a 5.699% CAGR. Pretty solid.
And the U.S. is the giant there, obviously, going from $2,105 million to nearly $4 billion, $3,982.93 million by 2033.
Yes, the U.S. leads, but what's quite interesting is Canada.
Oh, what's happening there?
Canada's showing really strong momentum. It started at about $437 million in 2021.
Right, 437.306 million.
And it's projected to hit over $1 billion, $1,019.5 million by 2033. That's a CAGR of 7.308%.
Wow, 7.3%. So actually growing faster than the U.S. market overall.
Exactly. That higher growth rate is definitely noteworthy.
Any thoughts on why Canada might be accelerating like that?
Could be a few things. Maybe a faster adoption curve in certain sectors, perhaps government initiatives pushing digital transformation. Hard to say definitively from just this data, but it's a strong signal.
Interesting. And Mexico?
Mexico's growing too, steadily, from about $174 million, $173.836 million, to roughly $280 million, $279.967 million by 2033. Solid progress.
Okay, so North America is strong, U.S. leads, but Canada's got this faster pace. How does Europe compare?
Europe actually mirrors North America quite closely in terms of its overall growth trajectory.
Really? Similar number?
Very similar CAGR, yeah. Europe goes from about $2.3 billion, $2,345.79 million in 2021, up to a projected $4.56 billion, $4,561.31 million by 2033. The CAGR there is 5.698%, almost identical to North America's overall rate.
Okay. And within Europe, who are the main players?
Well, you've got the expected leaders like the UK and Germany showing strong, consistent growth. The UK is going from around $328 million to $675 million.
Right, a 6.189% CAGR there.
And Germany, even bigger, starting at $412.86 million and heading towards $857.5 million.
Okay. But you mentioned something interesting earlier about momentum.
Yes. What's quite striking is Italy and Spain. Their CAGRs are projected above 6.5%.
Higher than the UK and Germany's rates.
Yes, indicating perhaps a faster catch-up or a particularly strong push towards these digital platforms in those economies right now.
That is interesting. And France?
France is growing steadily, too, from $340 million, $340.14 million in 2021, projected to reach almost $630 million, $629.461 million by 2033. Solid, consistent growth there as well.
Okay, so we've looked at the more, let's say, established markets of North America and Europe. Let's pivot now. Asia Pacific often comes up as a really dynamic region. How does it look for corporate banking platforms?
Asia Pacific is, well, it's a powerhouse in this space. Really dynamic growth. The forecast shows it more than doubling its market size.
Doubling, wow.
Yeah, from about $2.15 billion, $2,148.205 million in 2021, to a projected $4.68 billion. $4,678.7 million by 2033.
And the growth rate?
A very strong 6.701% CAGR. That's higher than both North America and Europe.
Okay, so faster overall growth. And within APAC, who's leading? China, I assume.
China definitely leads in terms of the sheer size of the market. It was about $752 million, $751.889 million in 2021, expected to hit nearly $1.6 billion, $1,586.0 million by 2033.
Right, but you mentioned something fascinating earlier, India.
Yes, India. This is where it gets really interesting. India's growth rate is exceptional. We're talking an 8.911% CAGR.
8.9%. That's huge.
It's massive. It means the market there is essentially tripling, going from about $316 million, $315.793 million, to nearly $880 million, $879.596 million.
What does that kind of growth tell you?
It really points to that leapfrogging effect you sometimes see, skipping older tech, jumping straight to the latest digital solutions. Massive digital transformation happening there.
Makes sense. And other key players in APAC?
Oh yeah, Australia, Japan, South Korea, Singapore, they're all strong contributors as well. It just paints a picture of a region really embracing this digital shift in corporate finance.
That APAC growth, especially India, is really something.
Okay, so following that thread, what about South America? Does it mirror that kind of dynamic growth, or is it a different story?
South America is definitely on an upward path, too. Significant expansion happening there. It's growing from just under $500 million, $493.852 million in 2021,
Right.
to over $1 billion, $1,068.22 million forecast for 2033. That's a healthy 6.64% CAGR.
So growing faster than North America and Europe overall, but not quite as fast as Asia Pacific?
Exactly. And Brazil is the dominant market there, as you might expect, going from about $205 million, $204.948 million, to $427 million, $427.288 million by 2033. It's effectively doubling.
And elsewhere in the region?
We're seeing good, solid growth across the board. Argentina, Colombia, Peru, they all have KGRs projected above 6%.
So it's quite widespread adoption then?
It's just so, yeah. A broad recognition that these platforms are key for modernizing corporate finance across the continent. Okay. Moving across the globe again, let's talk about the Middle East, another area often cited for rapid development. What's the data show there?
The Middle East shows pretty impressive acceleration, actually. It's projected to grow from just under $300 million, $296.31 million in 2021, to almost $671 million. $670.781 million by 2033.
And the growth rate?
A strong one, 7.046% CAGR. Higher than North America, Europe, and even slightly higher than South America's rate.
Interesting. Who are the main contributors driving that?
Key players are Saudi Arabia, projected to hit about $195 million, $195.197 million by 2033, and Turkey, expected around $144 million, $144.218 million.
Okay.
And the report also highlights the UAE and Qatar as particularly fast-growing markets.
Which makes sense given their focus on economic diversification and digital infrastructure.
Exactly. And the rest of the Middle East countries combined are expected to account for another $75 million or so by 2033.
Got it. So that covers the Middle East. And rounding out the regions, what about Africa?
Africa is also clearly on the rise. The market there is projected to grow from about $230 million, $230.464 million in 2021, to over $500 million. $508.117 million by 2033.
Okay, and the growth rate?
It's tracking at 6.64% CAGR, same as South America, actually.
So solid growth, showing increasing connectivity and modernization efforts.
Definitely. And the major contributors highlighted are Nigeria, projected to reach about $216 million, $216.458 million by 2033, and South Africa, expected around $199 million, $198.725 million.
Right. It really does paint a picture of a global shift, doesn't it? Even in markets that might be considered more nascent.
Absolutely. It underscores this worldwide move towards digitized corporate finance.
So we've crunched the numbers, we've toured the globe, but let's bring it back. What does all this really mean? Why is this market changing so fundamentally? And, why should someone listening care about these trends?
That is the crucial question, isn't it? What's really underneath all this consistent global growth? I think it boils down to a few key shifts happening simultaneously. First, just the rise of what you might call digital-first banking.
Hmm.
Banks aren't just adding online features anymore. They're designing services around digital interaction.
Right. Digital isn't the add-on, it's the core.
Precisely.
Mm.
Second, there's the huge adoption of enterprise-grade cloud platforms.
Hmm.
Banks are using the cloud to build systems that are way more scalable, secure, flexible than before, handling huge amounts of data, complex transactions.
Mm.
Third, you see much more AI-driven automation. And this isn't just about speed. It's AI handling routine tasks, reducing errors, freeing up people from more complex work, allowing banks to offer smarter services.
Okay, so digital first, cloud, AI.
And the force driver is just the sheer need for this stuff in today's economy, especially post-pandemic.
Hmm.
Businesses, large and small, they now demand seamless digital services. They want real-time transaction info, maybe even predictive insights from their banks.
The expectations have fundamentally shifted.
Completely. And what's really fascinating, I think, is how these platforms aren't just, helping banks keep up. They're actively enabling them to compete, to innovate, to actually meet these really complex, evolving corporate needs.
So they're not just tools, they're enablers, like you said earlier, infrastructure, the nervous system, maybe.
That's a great way to put it. The nervous system of modern corporate finance.
Right, yeah.
Absolutely.
Right. Well, that really ties it all together. It's clear the corporate banking platform market isn't just growing. It's on this really robust, sustained path driven by these deep shifts in how businesses work and what they expect from their banks globally.
Mm-hmm.
So, as we wrap up this deep dive, here's maybe something to think about. We see this evolution now driven by cloud, AI, digitization, but what happens next? How might future technologies, things like, I don't know, quantum computing, or maybe more advanced blockchain integrations, how might they revolutionize corporate banking even further in ways we can barely imagine today?
That's the million-dollar question, isn't it? Or maybe the billion-dollar one in this market.
Indeed. What could that mean for businesses, for banks, for the whole financial ecosystem worldwide? Something to definitely keep an eye on.
Welcome to the Deep Dive. Today we're going to unpack a really crucial topic, the dynamic world of corporate banking platforms.
That's right.
For businesses everywhere, these digital financial services, they're not just nice-to-haves anymore. They're basically the engine room for modern commerce.
Absolutely essential.
So think of this deep dive as your essential guide.
Mhm.
We're trying to make sense of a landscape that's changing really fast, how companies manage their money.
And our mission today really is to cut through some of the noise. We'll be pulling out the most important, actionable insights from the sources we've looked at. We've got some great stuff from cognitive market research, for example.
Right.
And we want to really focus in on the key drivers, what's
Exactly.
pushing this, also the significant hurdles, the challenges, and the really exciting emerging trends shaping these digital financial ecosystems for businesses.
Okay, so let's jump right in then. What is fundamentally accelerating this huge shift in corporate banking? What's really pushing banks to, evolve so quickly?
Well, I think we have to start with just the sheer demand for digital transformation itself, right?
Hmm.
Corporate clients, I mean, whether they're these huge multinationals or, nimbler mid-sized companies, they don't just want real-time, secure, seamless digital financial services anymore. They really expect them.
It's table stakes now.
Totally. We're talking everything from, complex cash management in real time to efficient trade finance stuff, even faster loan processing.
Right.
And the real insight here, I think, isn't just that these platforms deliver services. It's that by automating all the repetitive, high-volume tasks, banks can actually shift their people, their human capital, to focus on more complex, relationship-driven client needs.
That's a great point. It fundamentally redefines their value prop in the B2B space.
Exactly.
And, a massive enabler for that kind of, reinvention is the faster adoption of cloud-based platforms. Ah, the cloud. Always comes back to the cloud.
It really does. I mean, when you think about it, cloud solutions offer that scalability, the cost effectiveness, and rapid deployment that the old traditional on-premise systems just can't match.
Right.
But what's maybe even more powerful is how they do it. By consolidating all those fragmented data silos, cloud platforms create like a single source of truth across the whole
Yeah,
operation.
which must help with security.
Massively. It makes cybersecurity much better because it's just inherently easier to secure one consolidated environment, and it makes regulatory compliance much more streamlined, too. You get unified audit trails.
Got it.
So, yeah, this allows banks to innovate faster and stay really agile, which is crucial in such a competitive field.
And that innovation, it isn't just about speed, is it? It's also about navigating this incredibly complex web of regulations that just seems to keep getting tighter.
Definitely.
That's got to be another huge driver here.
Yeah.
The immense pressure from regulatory compliance, risk management standards.
Yep.
We're talking things like anti-money laundering AML, to stop illicit finance. Know your customer, KYC, verifying who people are. And Basel III, that global standard for banks demanding higher capital reserves and tighter risk management.
All crucial stuff.
Yeah, and they're not just suggestions, right? They're legal imperatives. They've pretty much forced banks to adopt solutions that guarantee transparency, offer built-in compliance frameworks, automate reporting, and give them solid audit trails.
Because without those.
Huge penalties,
Yeah.
reputational damage. It's serious.
Okay, so while the market is clearly, going up, it's definitely not a smooth ride. There are some speed bumps.
Uh-huh.
Maybe the most significant hurdle is just the sheer scale of the initial investment
Right.
and the complexity of actually implementing these sophisticated platforms.
Right, so it's not just flicking the switch.
Not at all. We're talking major infrastructure upgrades, incredibly complex integration efforts, especially with existing legacy systems, which I know we'll touch on, and extensive training for staff. You really feel this impact most with the smaller banks, especially maybe in developing regions. The cost, the potential disruption, it can really slow things down.
And it's not just the upfront cost and the hassle, is it? Even once you're sort of in, you've got this whole new world of vulnerabilities to deal with. I'm thinking specifically about cybersecurity and data privacy. It just feels like a never-ending battle.
It really does.
These corporate banking platforms, they handle huge volumes of sensitive financial data. So naturally, they become prime targets for sophisticated cyber attacks.
Makes sense.
Which means banks have to invest, incredibly heavily in things like state-of-the-art encryption, advanced intrusion detection systems, and strict compliance with data protection laws like GDPR.
Right, the General Data Protection Regulation.
Exactly. Those requirements, they're non-negotiable, but they can definitely make institutions that are maybe a bit hesitant just pause and think twice.
And often, the biggest internal challenge, which kind of ties back to that upfront complexity we mentioned,
Say,
is a pervasive issue of legacy infrastructure. Many banks are still running on these outdated systems that were just, well, they weren't designed for today's real-time interconnected digital world.
They're creaking at the seams a bit.
Pretty much. These older systems are often incompatible with new tech, which makes integration incredibly difficult. And it significantly increases the risk of operational downtime during any migration. It really raises that tough question. How do you modernize without, trying to change the tires on a moving car?
That's the absolute nightmare scenario for any IT department, isn't it?
Yeah.
But okay, despite those hurdles, and they are substantial, the market isn't just standing still. It's actually constantly evolving, and we're seeing some really exciting new trends shaping the future here. What are some of the most impactful shifts happening right now?
Well, a major one is definitely the rapid integration of artificial intelligence, AI, and machine learning, ML.
Okay.
These aren't just buzzwords anymore. They're actively being used for, everything from incredibly accurate credit risk assessment to sophisticated fraud detection, which can spot anomalies almost instantly. Also, predictive analytics that can foresee market shifts. They even enable hyper-personalized financial recommendations for corporate clients.
Wow.
The deeper insight here, I think, is that AI isn't just about streamlining operations. It's enabling a level of real-time, intelligent decision-making and service delivery that just wasn't possible before.
That real-time capability sounds like a genuine game changer.
It is.
And it ties in quite nicely, I think, to our next trend. The rise of these API-driven banking ecosystems. You often hear it called open banking. Tell us a bit more about what that actually means for a business user.
Right. So open banking, in essence, uses application programming interfaces APIs to create these seamless connections.
Okay.
What that means is corporate banking platforms can now talk directly and securely with other essential business tools. Think things like enterprise resource planning systems, ERPs.
Which manage core processes.
Exactly, and a whole host of third-party applications. This interconnectivity lets businesses streamline their workflows dramatically. I mean, imagine a company managing its finances in real time, pulling data from multiple bank accounts, maybe even different banks, all onto one single dashboard.
That consolidation is huge.
It is. And for global businesses especially, this capability for integrated, sort of holistic financial management is becoming just incredibly vital for operating efficiently.
That level of integration really does change everything.
Oh.
Okay, and finally, a truly transformative trend that I'm quite excited about is the growth of embedded finance solutions. Can you explain how this is different from, traditional banking and why it matters to businesses?
Sure. Embedded finance is really about banks delivering financial services, could be payments, loans, maybe even investment opportunities within the platforms that corporate clients are already using day in, day out.
So not a separate login.
Exactly. Instead of logging into a separate banking portal, a business might say, get a loan offer directly inside their accounting software, or maybe make a payment directly from their e-commerce platform. This approach is incredibly contextual, it's seamless, it makes financial services much easier to access.
Less friction.
Precisely. And it strengthens those client relationships significantly because the bank is becoming this sort of invisible, integrated part of the client's actual operational flow. And this, in turn, unlocks entirely new revenue channels for banks through, smart contextual cross-selling opportunities. So yeah, to kind of summarize our deep dive today, it's pretty clear the global corporate banking platform market is on a robust upward path. This growth is really powerfully driven by innovations in AI, the foundational strength you get from cloud infrastructure, and the expansive reach of open banking.
Right.
Together, these forces are fundamentally transforming how financial services get delivered to businesses around the world. We're moving beyond just simple transactions to these integrated intelligent solutions.
But, and it's a big but, to really unlock all that potential, institutions absolutely have to overcome those deep-rooted legacy infrastructure issues we talked about.
Yeah.
They need to navigate that increasingly complex web of regulations and perhaps most critically, ensure, bulletproof cybersecurity. It all sounds like banks face this really difficult choice.
Yeah.
Stick with what works but risk falling behind slowly, or face a massive, kind of risky overhaul.
That's the dilemma, isn't it? Indeed. And, as these corporate banking platforms continue to integrate deeper and deeper into business operations and they leverage these advanced technologies more and more, well, it makes you wonder, how might the role of traditional banks themselves fundamentally transform? Could they move beyond just offering services to becoming these integral, almost invisible layers within every single business's financial flow? Something for you to ponder.